Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to talk to you about what are merchant accounts, how does payment processing work, how does it affect you in doing international structuring. So let's dive in. Before we do that, click the subscribe button. They tell me you should smash or obliterate that button is apparently the modern terminology. But anyway, let's dive in. So here's the thing that we want to kind of, just to set the context, is most people are used to doing everything locally, right? You go and you say, hey, listen, I'm going to open up a company locally, I'm going to have a bank account locally, I'm local, it's relatively easy for me to do these things in most cases. Then we get to payment processing. Historically, payment processing was a pain in the ass. What does payment processing mean? Payment processing is when you can accept Visa, MasterCard, Discover, etc. On your store, right? And technically, it could be in a retail store, like in person. It could be, you have a little terminal that you're going door to door, like you get Square. Or you could end up doing it over the internet. Alarmingly, this was an incredibly challenging process historically. It is bureaucratic nonsense, okay? I'm going to go through a video in the future about how exactly, like what to expect and how to optimize yourself for that process, but it's quite a pain. Right now we're just going to talk about how this whole thing works, okay? And especially it starts getting harder if you want to have subscriptions, like it was pretty ridiculous. Now, fortunately, a number of years ago, Stripe came into the market, and Stripe has dominated just by making this much, much easier for people. Since then, there are some others who have come along who are pretty good. And so, the game has changed quite a bit, and it's quite a bit easier than it used to be, but it can still be hard. Now, where this gets much more complicated is when we start looking at international structuring. So one of the examples that I would talk to people about, and people would discuss, hey, how do you compare to, a typical tax lawyer, law firm, etc., an accountant, whatever. And a big part of the reason that, we're different is because of the fact that we look at your whole financial picture. What I'll often tell people is I'll say, hey, listen, yeah, you can go and talk to somebody who may give you the advice that, for tax purposes, the best thing to do is open a company in British Virgin Islands. And that might be true, that's, tax optimized. But it may be impossible to get a bank account, which is a practicality, and it may be impossible to get a merchant account, or your merchant account fees may be 2-3% of revenue higher, which in some situations, depending on your margins, could actually be more expensive than the cost of tax, okay? So when you come and work with us, a big part of what we're doing is we're considering your whole picture, all right? We're considering your whole, okay, where are your customers? Where are your suppliers? How do you pay them? How do you get paid? What about your employees? Do you have contractors? What's your situation in terms of your personal tax situation, and how does that reflect with your business tax situation? What about in terms of looking at like I said, your operations? What about the ongoing compliance? What about the banking side of it? What about your ability to get loans? What about your ability to exit, to raise investment capital, and so on, depending on what is unique to your situation. And as you add more variables, the complexity of this grows exponentially, all right? It becomes much, much more complicated. And we have to look at all of those things at once, because otherwise we may end up with what seems like a good idea on paper, but we can't execute it, or it's not operationally feasible, okay? So in this sense, the first thing to note is that virtually all traditional offshore tax havens, which we'll loosely call the islands, with the exception of Isle of Man, Jersey, Guernsey, Cyprus, Malta, kind of the EEA countries, okay, with the exception of those, are horrible for payment processing, okay? So in the world of payment processing, what you've got is you have a few different parties that are a part of this overall structure, all right? So the first thing you get is you get something called a merchant account, all right? A merchant account is essentially an account at an acquiring bank. It's not a transactional business account. It's purely for the purposes of payment processing, right? So when you have Visa and MasterCard, they use what's called a four-party system, okay? This is different from Amex, who has what's called a three-party system. So in a four-party system, the way that it works is you have a card holder, right, who has an issuing bank that issues their card, okay? Then you have a merchant who has a merchant account, and they have a acquiring bank, okay? So the merchant account goes to an acquiring bank, okay? So when this guy here takes his card and swipes it, then that's going to send a message to the acquiring bank. The acquiring bank is going to send something to the issuing bank. The issuing bank is going to pay the acquiring bank, and you're going to be confirmed. Everything's good. Okay? That's more or less what happens. And then they're going to pay you, and so on and so forth. So you need that. The second thing that you need in this is you need what's called a payment gateway, okay? A payment gateway is a piece of technology, and a lot of people will kind of confuse this. They'll say, oh, I need a payment gateway. It's like, no. You need a merchant account that goes with a payment gateway, and sometimes these get wrapped together. We sometimes call these payment service providers, okay? So for example, when you go to Stripe, you don't get a merchant account and a gateway. It's one and the same. Same thing with Braintree, same thing with PayPal, etc. But if you're looking at a lot of these situations, they're separate. So for instance, you'll have Authorize.net. People say, Authorize.net is my merchant account. No. Authorize.net is a payment gateway, and they happen to refer you to some merchant providers who provide you with a merchant account, which then plug into Authorize.net. The same is true for NMI, the same is true of Ogon and Payline, and there's tons and tons of payment gateways, okay? So great, payment gateways, merchant account, right? Now, what's very important here is that the shopping cart you're using, and by shopping cart, what we're really talking about is we're talking about the piece of software that is on your website, which is handling transactions. So this is ClickFunnels, this is Shopify, this is WooCommerce, this is Kajabi, this is, there's a ton of others, right? Tons and tons. But that's like your shopping cart, okay? So your shopping cart software needs to integrate with your payment gateway. Now the purpose of the payment gateway is to securely transfer the credit card information from your site to the bank, okay? That is its purpose. And for that, they typically charge you a per transaction fee, which is typically like around 10 cents, and it can go down with volume. In the case of when you have it bundled, it's usually about 30 cents, okay? So you've got a per transaction fee. Then the merchant account is usually not charging the per transaction fee. They're usually charging a percentage of the transaction, okay? And that percentage is based on something called interchange, and then there will be some addition, okay? And we'll get into pricing in just a minute. So normally you have these two fees kind of bundled in something like Stripe, something like PayPal, so you're used to seeing them together, but in actual fact, there's a separation between those two pieces. Now, this piece of technology, the payment gateway, is really important because it only works with certain banks, and it only works with certain shopping carts. So oftentimes when you work with us, you'll hear me ask, or you'll see in some of our documentation where we're collecting information, we'll say, hey, what is your shopping cart that you use? Are you using a particular payment gateway? Are you using a particular merchant account, right? These are all three separate questions, and they're important. If you have a certain acquiring bank, there's going to be a list of gateways that integrate with them, okay? On the flip side, if you have a list of shopping carts, there's going to be certain payment gateways that integrate with them. And this needs to work out properly. Why this is important is because let's say you're talking about, for instance, ClickFunnels. ClickFunnels has almost no payment gateways they support. In fact, it's pretty common today. I was talking to somebody a couple days ago who uses Kajabi, and they're mentioning that, hey, on Kajabi, they support Stripe and they support PayPal. Well, if you don't fit into the Stripe or PayPal business model, you're screwed, right? This is not good. And that may be a reason to choose something like WooCommerce over something like Shopify, right? Pros and cons to each one of them, but bottom line is WooCommerce, you're gonna have a broad range of payment gateways that are supported, whereas Shopify has quite a limited number because they're trying to push you to Shopify payments, right? Because basically then they're making money on both ends, right? They're making money off providing you with the Shopify store, and they're making money off of Shopify payments, right? Which is basically Stripe that's white labeled by Shopify. Anyway, so in that sense, you have to be aware of these different pieces and how they affect your structure. Let's go back to looking at kind of this from an international context, all right? So let's say that, for instance, I decide, okay, look, best place for me to set up from a tax standpoint, and maybe from a bunch of other perspectives, maybe banking is easy and things, is UAE, okay? But I want to use Kajabi. Kajabi supports Stripe, and Stripe is not available in UAE. So this is a problem, right? Or Hungary, we could look at something similar. Stripe is not in Hungary right now, so therefore, great, it's wonderful that you have a Hungarian company, you pay 9% corporate tax, it's fairly easy to set up bank accounts, things like this. Okay, wonderful. But there's no Stripe. Because there's no Stripe, any shopping cart that requires Stripe is now a no-go, right? You're out of that. And so this is part of the reason why oftentimes when people come to me, we start looking at things like US LLCs, UK LLPs, maybe Canadian LPs, etc., right? Is because we have to consider, okay, within the software that you're using, either you need to change the software, and sometimes people would try and convince them that, like I'll hear there's something called ISOs. So if you look at the way that the world of payment processing works, is you have acquiring banks. Acquiring banks will tend to work with usually payment facilitators. Okay? Payment facilitators have a certain degree of license that they've acquired from Visa and MasterCard, etc. Sometimes they're one and the same. It gets kind of cumbersome in there, but basically these are the guys who are like your merchant providers, really. And then there will be ISOs, which are independent sales organizations. Okay, so usually when you go and look for merchant accounts, you're talking to an independent sales organization who's talking to a payment facilitator who works with an acquiring bank. Okay, that's usually kind of the chain of it. So you're probably not dealing with the acquiring bank, and there may be different rules of these payment facilitators if they're willing to do their own underwriting. Okay, so they're willing to take the risk off the bank's shoulders, so then they have more flexibility. Okay, great. So let's say we go through, all right, this is perfect, this is what's going to go on here, you've got this. Well, in these particular situations, when you're getting set up with an international structure, you'll sometimes have ISOs who are saying, oh, just use WooCommerce instead of Shopify. And I'm like, are you an idiot? The reality is, this person has a business that they've set up in a certain way, they've designed their site in a certain way, there's a certain thing that they've done to make it successful, it converts well. If you go and you switch over to WooCommerce, now you have to worry about optimization. WordPress is notoriously bloated and slow, so now you have to figure out optimizing that, you have to figure out your own hosting. Then you've got, there's all these fancy plugins for Shopify that maybe aren't there for WooCommerce, so you have to go and do this. It's a complicated thing, right? It's not impossible. You can manually build all kinds of stuff. In fact, you could do it in HTML and CSS and things like this. But do you want to be in that situation? Your process of getting set up is going to be much more expensive, it's going to take longer, etc. Okay, so consider this as you're choosing where to go. Do consider what is going to be the consequences in terms of what are your payment gateway options, which will determine also what are your merchant account options, and go from there. So back to this this broader discussion. So yeah, as you get set up, if you're looking at payment processing, your options are much less if you're not in Europe. Okay, so Europe is kind of like the magic place. Now, let's talk about pricing, and this is kind of where you can see it reflected. If you're to use Stripe in Hong Kong, Stripe Hong Kong charges 3.4% as their base rate, plus I think it's 45 cents a transaction. You can easily, using one of the European countries with Stripe, get 2.4%. So you can see how you're saving 1%. Now, note that that's 1% of revenue, okay? So if you have a 20% margin, okay, then 1% of revenue is equivalent to 5% of tax. So that can be a pretty big difference, right? That can definitely add up. So the reason for this is because pricing in the world of merchant processing works as follows, okay? It's based on something called interchange. So banks, or Visa and MasterCard rather, set the interchange rates. These rates are super complicated. They vary by country. They vary by the type of card that is being processed. They can vary potentially by the type of transaction. Is it in person? Is it not? Is it 3D secure? Is it not? Is it, all these different things, right? So that can be, there's basically these huge complex interchange tables. Now, interestingly, so the European Union sued Visa and MasterCard a number of years ago, basically for kind of having monopolistic practices, and forced them to lower interchange across the EU broadly. Now, in theory, what this was supposed to do was this was supposed to result in lower rates for merchants. In practice, I have not noticed this to be the case at all. It seems that simply the parties in between take a larger pound of flesh. So it really was stupid. It's the reason why there are no cards in Europe that pay rewards, right? So if you go to Canada, the US, Australia, but in particular the US, you have these great rewards cards, right? You're earning 2% cash back or whatever points every time you swipe your card. Well, the reason for that is because the way it works is that every time you swipe the card issuer is getting a percentage of the interchange. So let's say that the merchant is being charged 3%, right? This would be a pretty normal number. So 3%, maybe 2% of that is going to the card issuer, right? If 2% is going to the card issuer, then they can pay out in order to acquire those customers. So they say, okay, great, we're gonna pay 1.5% in rewards, and we're gonna make the 0.5% so we attract these customers, and that's our business model. The other 1% I'm really grossly simplifying this because, of course, Visa has to take their portion. All these people along the way have to take their portion, pretty much, is what goes on. So, but they take their portion, and there's going to be a certain amount left for the acquiring bank. The acquiring bank is going to split that with whatever the sales organization is. Usually this comes in the form of there's some sort of a buy rate that they're given, and then they mark up over and above the buy rate. But sometimes it just depends on what the nature of those relationships are, okay? So why is this important? This is important because you have a few different parts to your rates normally, okay? So I already mentioned you have a payment gateway rate, and I mentioned that you have a merchant processing rate, okay? These two things are important. In addition to that, as I said, your rates are typically not flat. Even in the case of something like Stripe, who started out with purely flat rates, they have adjusted to account more for some of these things. So the obvious one that they always had was foreign currency conversion rates. Okay, so you have to convert currencies. That's something. This is going to be relevant, again, why it is that Europe tends to be favorable to, let's say, the US or Canada, is in addition to the fact that potentially interchange rates are lower, and potentially you can get some optimized tax treatment, etc. You're in a situation, and you have often a lot more options, because if you're not American, then you need a social security number for most merchant providers, even though this is a ridiculous requirement. It's totally stupid, because this is what will happen. I'm going to go on a little tangent for a second here. So if you go to most merchant providers in the US and you try to apply for a merchant account, they're going to require that you have a social security number, okay? Now, here's the interesting thing. If you ask them why, and you'll say, well, this is ridiculous, I have a US company, there's no reason that I shouldn't have this, they're going to say, oh, it's not us, it's a Visa requirement. This is bullshit. You know this is bullshit because PayPal, Stripe, and Braintree all don't have that requirement, okay? So obviously, that's the case. In fact, I can tell you a few others who are also in the same boat. So obviously, it's not a Visa requirement. But more importantly, the argument would be that this allows them to do a credit check, okay? So you can sometimes get around this by having a credit history in the US. So if they can run a credit report on you, then they say, okay, great. And the argument is, of course, supposed to be, well, hey, listen, we're safer because we know that you have a good credit rating. The problem is, nowhere else in the world do they do this, right? So if you have a merchant account in Europe, they don't require the same thing. They don't require this credit check. They don't. So what, somehow magically it's high risk in the US, but it's not high risk in Europe? This is asinine. Like, the people who are in charge have not thought this through very well, and they're missing out on a whole bunch of business because of it. So if you guys are watching, fix your stupid systems. It's really bad. Anyway, that's the end of my tangent. So the bottom line is, okay, potentially we can get lower rates in general processing in Europe. However, and the next thing that's important is, again, like I said, you have these foreign currency rates. So in a perfect world, usually what you want is you want something called like-for-like settlement, okay? This is because of the fact that usually what the banks are charging you is a ripoff, okay? So they're not going to give you a good Forex exchange rate, okay? So what will happen is, let's say that you charge in euros and then you settle to dollars, right? You're going to pay whatever percentage. It's going to vary from one to another, but potentially up to 2.5%, which is a big chunk, right? Again, consider we're talking about a revenue, which if your margins are low, is a big percentage of profit, right? So your ideal situation is if you process in euros, you settle in euros. If you process in dollars, you settle in dollars. You process in GBP, you settle in GBP, okay? The problem is, US merchant accounts, you can only settle in US dollars, okay? So it's fine if you're selling to the American market. If you're selling to a foreign market and they're willing to pay in US dollars, not a big deal. If they're not willing to pay in US dollars, and often you'll see conversion rates will go up when you ultimately apply local currencies, right? So if you're selling to the French market and you're selling in euros, they're more comfortable than if you're selling in the French market in dollars, right? Which kind of makes sense, kind of intuitively when you think about this. So if that's the case, say, okay, great, we want to charge in euros, then we want to settle in euros. So you can do like-for-like settlement with European processors. You can't do like-for-like settlement with US processors. So this is an important thing to be aware of, right? Now, what's the next part of the fees? The next part of the fees is you have something called cross-border fees, okay? Meaning that it's pretty much always cheaper to process payments locally. So I'm in Bulgaria. If I'm charging Bulgarian clients from a Bulgarian merchant account, that's probably cheaper than charging Bulgarian clients from a Canadian merchant account. And likewise, so you can see the cross-border fee in Canada is 0.8% typically. If you go and check out Stripe's processing fees, they'll do this 1% in the US. So in other words, if I'm saying, okay, great, my clients are in the US, I'm using a US merchant account, say a US Stripe account, I'm being charged 2.9% plus 30 cents a transaction. But if my clients are outside of the US, now I'm paying an extra 1%. So now it's coming in at 4%, right? So generally speaking, you're going to end up at, somewhere around a rate of 4% in those situations. And so it may be beneficial for you to have a setup in both places. Now, this is, again, kind of an advantage of when we're looking at Europe. First of all, European rates are somewhat different, and they have what's called the European Economic Area. Generally speaking, they have flat fees across the European Economic Area, and you don't end up being so screwed up in that regard. It's part of the free movement of goods and services and people within the EU. So that's something. The other part that's very, very important to realize, and is another thing that factors into this, is you have fraud protection. Okay, fraud protection is a big deal. I have a client who had an issue with Braintree a little while ago, and I forget how many fraudulent transactions they ran in like the course of a minute, like 12 grand in a minute or something like that. Anyway, a lot of these providers, it's usually at the gateway level that you have this, and a lot of them don't have good fraud protection. Okay, so you need to be aware of that. But it goes in reverse. So let's say that you want to have US merchants. So it's really common that we'll see, say, European companies selling to an American audience. We'll see Canadian or Australian or Hong Kong, etc., selling to an American market simply because it's a large market, right? Well, unfortunately, the decline rates are typically going to be much, much higher when you're processing US cards from outside of the US. And this is for fraud protection reasons, right? So it could go as high as, I've seen, 10% decline rates when it shouldn't be, simply by processing on a foreign card. So sometimes what you can do if you have enough volume is you can have what we call cascading mids. So you have, let's say, a merchant account in one place where you have lower rates, you can charge the card on that, and if it declines, you can cascade it down to one that's local, and then you can retry it to see if the problem was the fraud protection on this foreign transaction, and then get an approval so you don't have that loss. But be aware that if your decline rates are very high, that's going to hurt you a lot. So very, very important. Anyway, that's kind of an overview of how this works. It's obviously really complicated, and so I'm going to do some other videos on the subject. If you need help with merchant accounts, with high-risk merchant accounts, with opening bank accounts, with tax planning, with asset protection, etc., foreign companies, please reach out to us. You can check out, there's some links below. You can book a call with me, clarity.fm/Michael Rosmer. You can visit offshorecitizen.net, offshorecapitalist.com. Please subscribe to the video, like the video, and I'm going to see you guys on the next video.